What's up, guys? Thanks for tuning back in. I hope everybody's doing great. So I want to talk to you a little bit about investing for beginners. So many people have contacted me in reference to, what do I do? I'm just starting out. I don't know this much information about the stock market. I don't know much about making my money work for me. What exactly is the stock market? What is a stock? So many people don't really, this day and age, younger generation maybe, or just some people just don't know where to start, don't know what stocks are, don't know what that actually means, and what it can do for you. So let's break it down into the sense of a stock. A stock itself is an individual piece of a company. So a company, when they go into what's called a public offering, meaning that they are a publicly traded company, which like Apple, Tesla, anything like a larger corporation is a public traded company. What that means is you can own part ownership to that company. So any positive sales, anything that they're making money, they have to support their stockholders, right? Their stock's going to go up in value. They're going to, maybe pay dividends or maybe some other benefit to that stock holding. Some of them, like Coca is a large one, Apple, some of those bigger corporations pay a dividend. So every quarter or even every month or even biannually or annually, they pay a dividend back to you depending on what their portion is on their dividend. And I can show you later on in another video how to figure that out and what you need to do to see what the dividends are and so forth. But a stock itself is a portion of this company. So if they're having a good year, they're going to reward you with that, right? Their stock's going to continue to climb, and because more people realize, hey, this company's making a lot of money. There's only a certain amount of stocks that they have available. So, as this company continues to grow and people are holding higher portions, their value is going to go up. Their stock value is going to go up. So I wanted to kind of go through this and just do a small beginner video on how to maybe start a brokerage account. And I do have a link up above here, Robinhood or Webull. If you check them out, starting out, I would probably recommend Robinhood. It is a little bit more easier, a little bit more user-friendly if this is your very first stock you're ever buying. But if you check out that link or go down into the description section on this, I'll actually have a link that you can click on and it'll drive you to their website. The cool thing is I get a stock for you signing up as a thank you, and you get a free stock as well, valued at a certain percentage. I don't know what Robinhood's is right now. I'll look it up and then put a link here. Usually anywhere between, most of them were anywhere between $1,500 or less, I think it was. So basically you get drawn into like a raffle thing and it raffles off and gives you a free stock. When I signed up, I had gotten a stock of Snapchat. And then when I got it, it was only around 15 bucks Snapchat was trading in at. I grew up to 55 and some change, and I actually had decided to sell it off, and the money that I sold off, I actually reinvested into a company called Shift. I don't know if you've heard of them or not, but I'll put a link for them as well. That's a Shift Technologies company. It's kind of like a Carvana company, so you can buy a car online with them. I feel pretty passionate about them right now. I think they're going to continue to grow. Their stock's trading at around 9 to 10 bucks right now, but to give you an example, Carvana is up in the $200 and some range. But basically what that shows you is you're going to get a stock for it. So let's dive into this a little bit. I'm going to do a screen share with you here. We'll go into my Robinhood account. This is one of my smaller accounts that I have here. But as you can see, I'm right around 6,800 bucks. But today alone, I'm up 7.86%. We did have a drop back or a little bit of pullback in the market. I don't know if you've seen. So there was some pullback, but the market's starting to recover. I don't see anything, over the past year, I've done tremendously in the stock market. As you can see here, I had a dip. But just to show you, back in March and April, this account, I really only came up with this account. Let's see how much I put in. So I put in around $2,800 altogether. The high, and right now, like I said, we had a dip, but the high was at $8,500. So I had a 200% profit within the past, let's see here, February 1st of 2019. So it's been a little bit over 2 years. So in 2 years, even right now with the dip that we've had, 6,800, I still made $4,000 in 2 years. That's not a bad gain for, you know, putting a little bit of money in and watching it grow. In a savings account or something like that, I would have never had that kind of exponential growth. You know, and obviously with the COVID times, some things have changed, but definitely had some growth that I would have not had in a savings account. So just keep that in mind. So I'm not showing you what I'm holding right now. I don't have a lot in this account. I have NIO, which is an EV company. I don't know if you're familiar with that. I also have Shift, like I said, SFT is their stock ticker. So each company also has a stock ticker, which means it's like an abbreviation for the company. ACB is a medical marijuana company, have small shareholdings on that. They had a split back in, I don't remember when it was, but they actually, to raise some funds, they actually pulled back some of their shares that they had. And then I have 118 of Dodge coins. I just threw some money into it just to see how it would do. I'm only up like 2%, so I didn't have that much of a gain from that. But as you can see, I've had a gain for all of my stocks or my portfolio right now. So, all right, so let's go into this. So this is my Robinhood account to give you an idea. So here's your free stock thing. And like I said, I'll put a link down in below. This is going to show you your portfolio and show you what your different holdings are that you have. It's going to show me my cash on hand, which I don't have that much in here. I have 50 cents right now. This is going to show me any messages. So I got a tax form from Robinhood. So that showed me that. My account. And then, so let's say, okay, I decide I want to buy Apple. Okay. And I'm not doing financial advice right here in this video. I'm not telling you what I think you should go ahead and invest in. That's not what this video is about. So do your research before you go ahead and buy a particular stock. But I want to show you. So let's go to Apple. I know that Apple is AAPL. Okay. Obviously, majority of people in this day and age have heard of Apple at some point, right? So you probably know what Apple is, right? I would assume. So Apple here today is coming in at 127.36. So now if you would have looked at this, say I would have bought this, they haven't really, so they're back where they were. They had actually hit a high of 142.40. You look back a year ago, look at the dip there, 57.31. So back right when the pandemic hit, they were trading in at $57.31, and now they're up around 127. So you can see there was a 56 growth in that. So definitely back when the pandemic first hit, you probably could have, made a good chunk of change investing. Most people were, making decent money from investing then, even if they didn't know that much. But as I will continue to tell you, and as any trader will continue to tell you, that for one thing, don't trade with emotion. So don't be like, oh my God, people are buying, I'm gonna buy. Or, oh shit, everybody's selling, I'm gonna sell. The stock market has always had some pullback and some gains. So you need to continue to hold those shares. You don't want to just unload it all or continue, because that's where you're going to lose money and not gain money, okay? So know that this company that you're investing in, you want to be a firm believer that you're going to make some money. Or if you're not going to make money in the long term, that you're going to be investing in this company for the short term, okay? So maybe you know that, hey, this company is going to be doing good. I might sell down the road. Like Shift Technologies. Am I going to hold that forever? I don't know. I don't know if it's a company that I'll hold forever. I will hold on to it for a while, you know, because I could see this in the next 5 years being a larger company. NIO is a prime example. When I bought into NIO, let me show you this. And I kind of wish I would have bought more, but I didn't think it would have the pull that it did. I bought, let me see here. This usually says the average cost. Sorry, I apologize. It is not showing me that on here. So the average cost when I bought NIO was down in the, let me go back. That's $6. I bought NIO in around here, $3, $4, $5, $6, somewhere around there that I bought it. I actually have, so I have 125 shares here in Robinhood, and then I have another 350 shares in a Vanguard account that I hold. So will I hold on to NIO forever? Probably not. At some point, I'll probably sell it and then take that money and reinvest it into a dividend stock, something that I know is going to continue to have an upward trend, but it's not going to be as much. This to me was a growth stock. This to me, I knew that I was going to make some money at it. So if you look at this, it's up over 932%. Where can you have those gains? You can't, right? You know, you're not going to have those types of gains. So I knew that I was going to eventually be getting rid of this stock. Did I get rid of it at $61? No, I held on to it. Even though it had a pullback and it's still only at $49, I could have sold it for $10 more per share. So each share that I had, I could sell it for this amount. So I have 425 shares, I think it is. I could sell each share for $49.92 if I sold it today. So I don't have a calculator on me right now. Let me see, I can pull it up while we're doing a screen share. Maybe somewhere here. Sorry. My calculator's not here. Here it is. So $49.92. So if I decided I was going to cash out today, to give you an idea, and I said I have 425 shares, I'd have $21,216 in my name right now. I'm not going to do that because I see there being more growth potential in NIO. NIO is a company that is a competitor of some sort to Tesla. Tesla's bigger, obviously. But as you can see here, let's go to Tesla. Now this is a pullback. They've gone up a little bit, but this is a pullback compared to where they were. A month ago, they were trending in around $879. Now they're at $712. So you figure if I would have said, now I'm not saying that NIO is going to get up to the price point that Tesla is. I don't know that they'll ever compete to that margin. Tesla's a whole nother animal. But it just says came in at 725 and I had 425. That's 308,125. Okay, for all my shares. So what I'm trying to show you is that as the company's got its fluctuations, its highs and lows, you want to look at a company and determine what you want to invest in, what you want to hold portion in. You want to definitely be investing in something that you feel passionate about and something that you could see succeeding. Like Coca-Cola, for example. Coca-Cola is not going to go away, right? Coca-Cola has not just Coke products, soda. I mean, we all say we're cautious on drinking certain things. Maybe we don't want sugary things in our diet and stuff like that. But Coca-Cola has been a company that's been around a long time. And I don't know if during the pandemic, if they've missed any payout on their shares. No, they had a pullback. Look, they were up at $60. They had a pullback when the pandemic hit. And as you can see, they're going upwards. I can't do an all with NIO or with Robinhood there. But if you go back, so the cool thing about Coca-Cola is they pay a dividend. They've continued to pay their dividend out. So what that means is that depending on what their dividend payout is, I don't know off the top of my head here. I apologize. So anyways, 3.35% yield. So that means that they pay out a dividend on their funds every single year. Now, I don't know if they pay out monthly, quarterly, biannually, or just annually. The cool thing about it is, as a dividend, you can do what's called a drip investment. And when you're doing a drip investment, what that means is that money that you made, that instead of them handing over that money, say you made, I don't know, say you put $100 in it, you got 2 shares. You're not going to make that huge amount. You might make $1 or $2 or whatever it is. You can either say, hey, I want my $2, and they'll pay it to you, right? They'll cut you a check and mail you a check. If you say, hey, that $2 I made, I want you to go ahead and do something with it. I want you to go and buy more Coca-Cola stock. So instead of now having 2 shares, I got 2 shares and 0.2 because it's $50 or 0.4, whatever it is, whatever it works out to be calculation-wise. So they go and buy more shares of that Coca-Cola stock. Now what happens is you're going to make a dividend on the new holdings, right? So as you can see, it continues to snowball or climb up that mountain over the years. So that's why they say to start investing when you're younger and not older, because it has more time to continue the growth, okay? So I know this is a lot of explanation for this first video, but like I said, what I want you to, as an investor, start out little and play with it. See what you can do with it. Find out information. Do some research. Invest in companies that you know are bigger companies. Maybe go to the S&P 500. Type in S&P 500. And look at the top companies up there. And maybe invest in something there that you know is going to continue to have some upward trend. It might not be as risky. It's going to be less involved. So we'll go ahead and dive a little bit deeper, and I can show you how to tell what risk is involved and stuff like that in some of my other videos. But this was just a beginner's investing idea and some of the ways to start investing with the stock market. I appreciate you for tuning in again. And sorry, I went a little bit on a tangent, but I wanted to kind of give you some information. I appreciate you for watching this video again. And if you have any questions, comments, make sure you comment in that comment section down below, because it does help me. I want to make sure that I'm helping people grow and continue to succeed. Also, if you don't mind giving me a thumbs up and hitting that subscribe button, because what that does is lets me know that you're getting some information from these videos, and then I am continuing to give you knowledge and you're continuing to grow. So thanks again for tuning in. I appreciate it. My name is Jeremy Guldin. I look forward to seeing you next time.